Good morning. I'm your host, Joanne Jobin with Vid Media, and today we welcome Arizona Sonoran Copper Company. We're here this morning with CEO George Ogilvie, who will update you on the company's most important milestone regarding their recent announcement on an option with Rio Tinto to joint venture on the Cactus Project in Arizona. Before we get started, I do want to remind you that if you have any questions for the company, please place them into the Q&A tab located at the top of your chat sections. We will answer as many questions as we can at the end of the presentation. George, without further ado, the stage is yours.
Many thanks, Joanne, and thank you for everyone for joining us this morning. We're very excited to announce this strategic transaction with Nuton, obviously to pursue an environmentally friendly copper mine in the US. Thank you, Alison. We do make some forward-looking statements, so I draw your attention to the cautionary language. We will go into these bullets in a little bit more detail, but at a very high level, the transaction essentially provides Arizona Sonoran with $33 million that will be given to the company over the course of 2024. At the same time, it secures a commitment from Nuton or Rio Tinto to assist with the project financing, including debt on the project. You'll see later on when we describe the transaction, it has the ability to significantly minimize future equity issuance, which therefore means on a NAV per share basis, it would be accretive for the shareholders of the company. Thank you, Alison. When we look at the production profile, as you know, we've tried with the upcoming PFS to target a range of 45 to 50,000 tons of cathode production a year. Now, in internal models, when we've ran the Nuton scenario, we've seen a significant uplift in production, anywhere between 80 to 100%. So the thinking is that if through a Nuton integrated PFS, we could almost double the production, theoretically, we might be looking at 80 to 100,000 tons of production if Nuton were successful and if Nuton exercises the option to enter into the JV. If that were the case, and Nuton was getting 40% of the attributable copper, that would be 40,000 tons, but Arizona Sonoran shareholders would remain with the 60% attributable copper. So that could be anywhere between 50 and 60,000 tons of copper cathode. So with this transaction, we believe there's the ability that at the end of the day, the attributable copper is in line or slightly better than what we will see in the pre-feasibility study that'll come out in the first quarter of next year. Obviously, with the Nuton technology as well, it gives us a clear path towards green copper in the US. And obviously, we're supporting Nuton's pillars with respect to ESG. And I think you'll see within the schedule that we'll present by the end of 2024, we will commit with Nuton to produce an integrated pre-feasibility study that will be built off of our own pre-feasibility study that will come out early next year. Thank you, Alison. So if we get into a little bit more of the granularity of the deal, obviously Nuton has the ability to earn in at the asset level up to 40% of the attributable copper. You'll see from the $33 million that it's broken out into three specific areas. So upon the signing of the agreement, we've already put a request in for the $10 million payment that we would expect to receive prior to the end of this calendar year. And the steering committee is currently working on the scope of work with respect to the work activities to advance Nuton at the mine site next year. And we envisage that that would be a $12 million program, principally looking at the drilling out of the primary sulfides, which are currently in the inferred resource. And of course, those would need to be drilled out into an indicated category if they're going to be included in an integrated Nuton pre-feasibility study. Now, one of the things to note of the $12 million payment there is that just under $3 million of that relates to an administrative, or essentially a management fee, which covers wages and salaries for the Arizona Sonoran Project team who will be engaged in managing these activities. And beyond that as well, there's an $11 million land payment, which essentially is made from two tranches. So $5 million we will draw upon sometime early next year, and that will go to the Mainspring land payment at the end of February. That's important because at that point in time, we will then take title to Mainspring. And then the additional $6 million can be drawn in November and December of 2024, which is in time for a $6 million payment on Mainspring at the end of February in 2025. These monies are quite important because obviously they're not just for Nuton, they actually bolster our own treasury. The other thing to note as well, that as we're drilling out the primary sulfide, particularly around Cactus West, in a lot of instances, in order to reach the primary, we have to drill through the oxide and the enriched material. So in actual fact, some of our own measured drilling will actually be covered with the Nuton drilling as we look to drill out the primary sulfide. We have committed to produce our own base case pre-feasibility study. As you know, that's coming out in the first quarter of next year. It will include Park Salyer, Cactus West open pit, Cactus East underground, and the surface stockpile. It will not include Mainspring, as Mainspring will only be an inferred resource at some juncture in the first quarter of 2024. Our initial indication of Mainspring is it looks quite promising, and a lot of our own budgeted monies next year are aimed at moving Mainspring into an indicated resource by the summer of 2024. And if we see that Mainspring could be accretive to the base case plan, our intention would then be to bring Mainspring into an updated pre-feasibility study sometime before the end of the third quarter 2024. And then with the integrated Nuton PFS being completed at the end of next year, we would then compare that to the updated PFS that goes out in the third quarter. That's why when you see the triggering events, if there's no Mainspring for Nuton to actually trigger the option, we need to see at least 1.39 times an uplift in the NPV on the standalone basis. If Mainspring were to go into the pre-feasibility study, then the trigger becomes 1.2 times. So for example, if our own base case PFS coming out in the first quarter of next year had an NPV of $500 million US for the integrated Nuton PFS without Mainspring to trigger, we would be looking therefore something in around $700 million US, or 1.39 times would be the number before it would actually trigger the option. The other key thing to note in this transaction is that under the Nuton scenario, the equity issuance for ASCU cannot be higher than the equity issuance required on our own standalone case on a 50% equity, 50% debt basis. So again, for example, there, let's say the capital on the standalone basis was $500 million US, 50% debt, 50% equity. That would essentially mean that we'd be looking to raise $250 million in equity. Under the Nuton scenario, the equity portion for ASCU cannot therefore go above that $250 million. And if it did, then the delta would actually then move into the debt side of the equation. And of course, on the debt, Nuton and or Rio will provide us with a completion guarantee on the project or a performance guarantee on the technology. And I'm sure you can appreciate that going to various debt lenders, including commercial banks, if we have Nuton and or Rio standing behind the project with their attributable share, and providing those type of guarantees, the likelihood of gaining project financing, including the debt, is probably quite high. When we get into the exercising of the option, the payment, the way it would work, and I'll just use this as an example, would be that let's assume that the NPV of the project on the base case is 500 million. And let's assume that Nuton sees a 1.5 times uplift in NPV, something therefore above 750 million US dollars. Under that scenario, Nuton would be able to earn in to 40% of the asset. But of course, they would have to pay the Arizona Sonoran shareholders for 40% of the base case. So 40% of 500 million US dollars is 200 million. And we've set the PNAV multiple at 0.65. So 0.65 of 200 million is 130 million US dollars. We then deduct the land payments, which is offsettable, meaning that potentially Nuton could be providing Arizona Sonoran with $100 to $120 million of funding that could then be directed towards the project financing and particularly our equity contribution. And of course, if the financing, the capex is 500 million, but Nuton has to fund 40% of that, we only have to fund 60% or $300 million, 50% debt, 50% equity. Under that scenario, we'd be looking to raise $150 million in equity. But if Nuton has provided us with an option payment of $100 to $120 million, under that scenario, it means that the company only has to issue equity to raise an additional $30 million. So there is significantly less shares issued and the project is financed. So on a NAV per share basis, if this technology is successful over the course of the next 12 to 18 months and the trigger events are met, the NAV per share is hugely accretive for the current Arizona Sonoran shareholders. Thank you, Alison. If we look at the current structure of the company, as you know, Nuton is a 7.2% shareholder at Topco. They've invested close to $15 million, and they remain very strong, supportive shareholders, obviously. With this structure that we've proposed, as you can see on the right-hand side, indirectly, Nuton would own between 39 and 44% at the asset level. Now, it's not specifically on this slide, but we were asked this yesterday, so I will bring it up. Our intention is still to conduct a bankable feasibility study on the back of the PFS that will come out early next year. We're very confident that this technology with Nuton can advance, but of course, as a management team, we also need to be prudent and we need to manage risk. And in a worst case scenario, if the technology doesn't prove up, or at the end of the day, Nuton decides not to exercise the option to JV, we need to ensure that the base case plans continue at pace, and we therefore have our contingency plan in place to go it alone. Thank you. So you may remember a couple of days ago, just prior to this announcement yesterday, we did announce the latest updates on the phase 1 column tests. We've continued to see the primary sulfides and the secondary sulfides continue to improve in recoveries. Leaching time on the columns now are anywhere between 200 and 250 days on the primary. And as you can see there, the bulk of the columns were between 80 and 85% recovery. Interestingly as well, on the secondary sulfides, which are part of our own base case, we see recoveries that are between 5 and almost up to 10% better than what we have under our own process. So there could be some further incremental improvements to both recoveries, obviously production, and therefore the financial and economic model. Obviously, Nuton does have similar agreements with other companies out there, as you can see on the left-hand side. However, we believe with the advancement of our column tests and obviously the announcement of this JV. We believe at the end of the day that we will be the #1 project for Nuton to advance through to commercial production, given obviously the benefits with the Cactus Project being on private land, access to water, brownfield site, surface stockpile there, no federal nexus, etc., etc. So there's very few inhibitors or roadblocks to moving this thing forward in the next 2 to 3 years into first production. Thank you. Obviously, we remain committed to our ESG. As you know, we're revitalizing a brownfield site. The beauty of the technology, it's a very low carbon footprint. It takes advantage of what will then be existing leaching pads and SXEW plants, very low carbon emissions. Normally, as you know, primary sulfides have to be treated through a flotation mill. A concentrate is made. It's shipped out to a smelter that requires further energy, further carbon emissions, and then, of course, further refinement. So this technology takes advantage of a standard SXEW and heap leach, which is very low in carbon emissions. Of course, we think our timing on this is going to be excellent as well. This copper will be going right into the US domestic supply for renewable energy, can go into electrical vehicles, and it's going to help the US at a time where there's going to be significant demand. Obviously, Rio Tinto has a significant marketing department, and I'm sure they're going to be able to assist us in ensuring that this copper goes into the green energy sector in the US. We have committed that over the first 10 years or from 10 years from first production, whichever is the soonest, that the mine will be carbon neutral. And we will be conducting our own life cycle analysis on our pre-feasibility study early next year. And it appears as if Nuton will piggyback on the back of that with the Nuton integrated PFS that will come out at the end of 2024. So water positive, obviously, heap leach SXEW uses significantly less water. We will obviously be recycling that water. There's obviously strong positives that the copper will go into, the green energy sector and requires a lot less energy to be produced. We are revegetating or regenerating old lands. If this technology proves successful, it could have a multitude of applications around many copper mines in the world where there are low-grade primary sulfide stockpiles just sitting. And of course, we're adding significant value here through, mining low-grade stockpiles. We have had discussions with the local community, and obviously everybody's extremely positive with the steps that we're taking forward here with our joint venture partner. Thank you, Alison. So lastly, 109 million shares issued, no debt. Today, the company sits with just under $9 million cash in the bank. At the end of the year, we'll be sitting with $7 million. Remember, we will be receiving a payment, however, from Nuton for $10 million. So that'll take the treasury up to 17. Of the 12 for the work programs for Nuton, approximately $3 million of that is for management's fees, salaries, and wages. So that essentially takes our own treasury up to 20. And then there is a $5 million payment, which we will make on Mainspring, which was part of our original budget that was approved last week. So essentially, the company will have access to $25 million through this agreement and with monies we currently have sitting in our treasury. And right now, the baseline budget that was approved by the board just last week in Arizona is for $20 million. So effectively, what I'm telling you is that there's no requirement for Arizona Sonoran to come to the market in the next 12 to 15 months and raise any money at these low equity prices. We're going to put our heads down and we're going to continue to deliver more value for the shareholders of the company. So that concludes the formal part of the presentation. And Joanne, I'll hand back to you, and I'm happy to open up the floor and answer any questions that anybody may have at this juncture in time.
Thank you, George, and thanks everyone for tuning in. My goodness, George, you have quite a fan club. We've got over 100 people in the room today. Thank you for a fantastic update. We definitely have some questions, and we're going to start taking them from the audience in a few minutes. Again, just a reminder for everyone to please place your Q&A into the tab located at the top of the Q&A section. All right. So we have a list of questions from Mr. Barreto, who I know that you know very well. So what I'll do, George, is I'll start with, instead of asking you all the questions, let's just go through them one by one. And hopefully that will answer a lot of people's questions who are coming in after this. Okay. First question. The JV is based on the outcome of the 10 million column tests.
10 meter.
Oh, 10 meter, sorry, 10 meter column tests. What happens if the technology doesn't scale? Do you have a clawback or a termination clause?
Certainly, you know, if the triggers on the financial and economics are met, and we then proceed forward with, you know, construction and development, and then we then get to commercial production and see that the technology doesn't scale well, then of course within the JV agreement there is the ability to terminate that agreement. But what happens at that juncture in time? The beauty of this technology is it takes advantage of a standard heap leaching pad and a standard SXEW plant. So in a worst case scenario, if the technology does not work at commercial scale, the mine is now built, and we know that the oxides and the secondary sulfides process extremely well. And I believe that the mine would continue and would do extremely well in generating significant free cash flow for its shareholders.
Excellent. All right. Second is a three-part question in regards the termination option and change of control. So does it come with a break fee? And do you also have a termination clause in the change of control? And if so, is there a break fee for you? And if you don't have a termination clause, do you think this detracts potential acquirers?
Yeah, so does the Nuton termination option come with a break fee? Yes and no. And what I mean by that is that if there's a change of control and we are given an offer from another company, a bid comes in and the board believes that it's a very accretive offer, we have to advise Nuton of who the counterparty is. And then at that juncture in time, Nuton has at their option, the ability to walk away or remain within the JV, which therefore means the acquirer has to come in on the basis that they know that they could be working with Nuton on this asset. If Nuton decides to walk away, then any monies that the company has been given within that $33 million has to be repaid back. So you could argue that that is the break fee, but there are no additional monies to be paid on top of that. So for example, if we had drawn the 10 million and used up 5 for the drill program and hadn't taken any additional monies, under that scenario, only $15 million would have to be paid back at that juncture in time. ASCU does not have a reciprocal termination fee, and there's no break fee associated with that, therefore. I don't think that this detracts from potential M&A. I mean, the reality of the matter is that in our own base case plan, if we can get to 45 to 50,000 tons of cathode production, I mean, you've got to think that some of the senior base metal producers, copper producers out there probably wouldn't look at us as we would be a little bit slow. So bring a little bit small, sorry. So, you know, bringing in Nuton or Rio Tinto, probably we were never on their radar screens. I actually think that more of the mid-tiers will look at this as being extremely positive, and they might actually see as more of a potential target on the back of this announcement being made. And the reason for that is you've got a wonderful JV partner who could fund the project, and that obviously minimizes risk, while at the same time you're getting access to 50, 60,000 tons of attributable copper that's at least going to have a minimum of a 25-year mine life. And I would expect by the time we add in the Nuton on top of that production profile, the mine life is probably going to be closer to 35 to 40 years.
Excellent. And finally, does Nuton dictate a change in mine plans relative to the base case project?
Well, there is a joint steering committee that has been formed, 2 representatives from Nuton, 2 representatives from Arizona Sonoran. And of course, they will be, responsible for the drill program. And then that team will be obviously leading in working with consultants in putting together the integrated Nuton PFS. The integrated Nuton PFS could look very different from what we have in our own base case plan. But at the moment, we don't believe that would be the case. And the reason why I say that is in our own base case plan, the first 10 years of production are really coming from the surface stockpile and mining of the Cactus West open pit. And we know at the bottom of the open pit currently, once we do the layback and mine the oxides in the enriched material, there's almost 1 billion pounds of copper in primary sulfide sitting there, already exposed, just waiting to be mined. So we think there's a strong likelihood that at this juncture in time, the integrated PFS, inclusive of Nuton, would probably follow that plan very closely, because that's where all the primary copper is sitting. Where that could change is potentially with Mainspring, but it's too early yet until we've drilled it out, at least at the end of the first quarter, into an inferred resource, to have an understanding ourselves as to where that could come into our own plan. The viewers or the listeners may know that as well, that in the initial drill results we've put out at Mainspring, we've been drilling the full extent of the mineralization all the way to the basement fault, including the primary material. And all of the drilling we intend to do next year on Mainspring will include primary drilling as well. And we're already seeing 200 to 300 feet of vertical mineralization of primary at some decent grades.
Okay, the next question, George, is we're getting a few questions. I'm going to put them together regarding timing. So how does the inclusion of Nuton of the process affect timelines to FID and production, and also the timing of the DFS and the Cactus schedule in general?
Yep. Well, our timing is going to remain the same with respect to our own base case plan. So we have our own pre-feasibility study coming out in the first quarter of next year. At the end of that first quarter, we'll have an inferred resource on Mainspring, and we'll have to make a decision whether we want to try and incorporate that into an updated PFS, which, as I said earlier, we would try and put out by the third quarter of 2024. And in conjunction with that, on the completion of this PFS that will go out early next year, we do intend to roll immediately into a bankable feasibility study. And the plan of action at the moment is still to have that completed at the end of 2024. The Nuton integrated PFS is due at the same time at the end of next year. And of course, we'll have then a direct comparison with the Nuton plan versus our updated PFS and or a soon to be completed bankable feasibility study. At the bottom line here is that we're very bullish on this technology, and we do think that it does have a lot of potential here on this deposit. But at the same time, we need to be able to manage risk. And in a worst case scenario, if the columns are unsuccessful or the financial triggers are not met, we want to try and minimize any slippage in the schedule as much as possible.
Excellent. Now, here's a really great question. So you announced your metallurgical results 3 days ago, indicating the need to use a high temperature of the Nuton solution and relative high acid consumption. So is this still economically viable for the primary ore?
Well, temperature is important. We also ran columns at lower temperatures, and the recoveries were not as robust as what we saw at the higher temperature ranges. And if you look at the projects that Nuton has sort of tried to engage with, you can see that they're in dry, arid environments, obviously, where there's generally good temperatures throughout the year. So we believe that those temperatures can be generated within the leach pad. Our ore body also contains quite a bit of pyrite, which actually creates an exothermic reaction. So there's actually self-generation of heat within the leach pad itself. And I can tell the listeners as well that Nuton several years ago conducted a 70,000 ton bulk sample themselves at the Kennecott mine in Utah, and got very good results in the field from this technology. So we're quietly confident that we can maintain those temperatures in the pad and see those type of recoveries. There's a lot of work certainly to be done with more rigorous column tests next year, and obviously we need to try and see if we can get that acid consumption down. But again, one of the beauties of this deposit is that for the enriched material, we actually see a lot of self-generation of acid, which would significantly reduce the overall acid consumption. So, if you got a mine plan together where you will be blending enriched material with primary, I don't know what the blend ratio needs to be, but is there potential for having a 2 or 3 to 1 blend of enriched to primary, and that could also mitigate the risk of high acid consumption coming from the primary because you're self-generating it with the enriched material. So it's another one of those reasons as why I believe this is probably their number one project that they would like to get behind and take this thing through to commercial production.
Okay, thank you, George. Does the Nuton PFS include a fee for using the IP, or does it assume free use of the IP? And if you don't take up the option, and if Nuton should not take up the option, I should say, would you still be allowed to use the process?
Well, great questions. Yes, there is a IP fee that is built into the JV agreement. That has still to be negotiated. Now, remember, the IP fee will go into the integrated Nuton PFS and will affect the economics. So if that number gets too high, it's going to bring down the overall economics of the integrated Nuton PFS, and the triggers won't be met. So, there is a fee in there, but I think it will be very manageable. And at the end of the day, I think Nuton and ourselves are committed to see a successful program and take this thing through to commercial production, because it's then a win-win for everybody.
Okay, excellent. Next question, pilot plant. Are you going to use a pilot plant to demo the Nuton performance prior to full construction? And how will this, for my benefit, how will this affect CapEx if you go with the pilot plant route?
Well, we've discussed a pilot plant with Nuton in the past, and at this juncture in time, there are no plans to actually put in a pilot plant. So if the technology proves successful in the laboratory and the triggers are met and we are able to project finance this, our intentions at this current juncture in time are to proceed ahead with construction and development and put this mine into production as quickly as possible.
Okay, so let's talk about those triggers. You mentioned that there's a potential 20 to 40% uplift, and only if the option agreement is triggered if there's a minimum of 39%. I think that's what it's saying here. Should we interpret this then that the option agreement is only triggered when Nuton performs at the very high end of expectations?
Yes and no. I mean, I think within the Nuton themselves, they certainly believe that they can certainly bring at least a 20% uplift in the economics. So, if we go down the mainspring option, then maybe that's a little bit easier of a threshold for them to attain. But certainly getting up into the 39 to 50+%, that's certainly getting up into the higher end of the range. But on the mainspring option, although the threshold is lower, and again, I'll just throw out some numbers here, don't take anything from them, it's purely for example purposes. If our base case is 500 million without mainspring, and let's say our base case becomes 800 million without mainspring. Now a 20% uplift on 800 million is, a higher number than a 40% uplift on 500 million. So the 40% then of a billion plus is 400 odd million that would have to be paid to, or at times 0.65 would have to be paid to Arizona Sonora shareholders for them to earn into the project. So although it's a lower threshold, the absolute dollars that would be given to the company will probably increase under the mainspring scenario.
Okay. Next question. Someone is asking regarding the 80 to 100% uplift in production. Does it mostly stem from the primary to be drilled out yet?
Yes, I think that would be correct. I mean, the primary sulfide is a stranded resource for us. So it's not included in any of the plans that we've put out publicly or stated. And it won't be included, obviously, in this pre-feasibility study. And as I referenced earlier, once you do the pit layback and you mine out the oxides and the secondary sulfide, there's 1 billion pounds of copper just waiting at the bottom of the pit, exposed, waiting to be mined. So that's really where you can push additional tonnage through. There will be, I think, a small incremental uplift from copper from the secondary sulfides based on the improved metallurgical recoveries that we're seeing at this juncture in time. But predominantly, yes, it will come from the mining of the primary sulfides.
All right. Question. Does the Nuton process affect the permitting process and water rights usage?
No, not at all. And again, that's the beauty of the technology, in that it takes advantage of a standard heap leach and SX-EW. It's not as if we have to go out and build a separate concentrator and a tailings impoundment area. No, it takes advantage of all the existing or all the infrastructure that we plan to build ourselves as part of the base case, and therefore there is no impact on any of the current permits that we have or will be applying for.
Okay. And here's a question, and I'm seeing this in bits and pieces everywhere else. How accretive and important is this deal, not just to the company, but also to the shareholders?
Well, as I referenced earlier, if we go down this track, the amount of shares that we have to issue to finance the project is minimized significantly. And in some situations, we may not actually be even issuing any shares to do project financing on this project, depending on the payment that we would receive as part of the option payment from Nuton. So under that scenario, it is highly, highly accretive. And as I said earlier, the attributable production that is left to the Arizona Sonora shareholders is going to be still in line with what the pre-feasibility is on the standalone case. And, from a financing perspective, I believe with the announcement of this deal, if the Nuton technology is successful and if that financial trigger is met, we have de-risked this project from a financing perspective, both on the equity and on the debt side. And I can absolutely assure you that if we get into construction and development from an execution perspective, this project is going into production. Rio Tinto and Nuton will want to show the world that this technology actually has a home, has a place, and could be hugely beneficial for other copper mines out there. And that's really where I think they're going to grow their copper division and be hugely successful. So everybody is motivated to build this mine.
And may I say that Arizona Sonoran is just the right size for them to really test this out, to make sure it works before they roll it out to some of their larger partners and companies as well.
Well, think about it, Joanne. I mean, if at the end of the day, we get up to 100,000 tons of cathode production and they get 40,000 tons of attributable copper from this deposit, a mine, let's be honest, that for Rio Tinto is too small and they wouldn't be able to run it efficiently and really make any money from it. If they do that with 10 other companies, they just grew their copper division by 400,000 tons of annual copper. That's equivalent to a Los Bambas, at First Quantum, Cobre Panama. So it's definitely,
and without that hefty capex, you know, those mines are like $1 billion
without
plus
5 to 6, you know, upwards of 10 billion to build it. This is something that's very, very, very manageable in Arizona on private land with access to water, very strong social license, no federal nexus. We haven't even spoken about the regional potential and the regional play that could develop here over the next several years.
Yeah, you guys are like in the perfect storm to make this work with great partners. So excellent. All right, next question. Speaking of land, what is the current status of the land issue with RAM or RAM company indicated in the PEA study of November 22?
RAM recently applied for another application for their hydro permit. I believe the regulators requested any feedback on that. And just in the last week, we submitted a letter indicating that we didn't feel it was a particularly good idea that there be a hydro project on this project. I can tell you that various other regulators sent in letters of support. And of course, if FERC decided that there should be a hydro project here, remember, they would then have to pay us for the economic benefit that would be lost to the Arizona Sonora shareholders. Of course, in the last 2 years, 3 years, we've grown the resource now to 7.4 billion pounds of copper in the ground. So the Arizona Sonora shareholders would have to be, obviously compensated for that loss if in a worst case scenario there was going to be a hydro project here. I think the chances of that happening are absolutely minimal. I've probably got more chance of getting on Elon Musk's rocket ship to Mars in the next couple of years.
Oh, goodness. That's funny. Okay. Next question. Data room, M&A, disclosures. I know you have to be really careful about what you say, but are there, let's just form it in the most general terms. Are there other interested parties circling around?
We've had lots of interest, in the project and in the company. I can tell you that up to this juncture in time. I mean, obviously, we continue to put out good news. We've deliberately shied away from bringing many groups into our data room until we completed our pre-feasibility study. As you know, up until recently, everything's based off of PEA and an inferred resource. And if groups come into the data room, they ask a lot of questions, but it's a resource, mostly in the inferred category. With the resource update and now coming out with a PFS and having, real mineable reserves and having a financial and economic model built from reserves, there could always be potential for, engaging with other groups. But at this juncture in time, I'd have to say that, we're just kind of keeping our heads down and trying to deliver on our base case plan, and obviously very keen to work with Nuton and see this technology being successful.
And speaking of resources, does the current plan only target open pit accessible primary sulfide ore, or are there plans to access primary sulfide mineralization through underground mining?
It's a good question. There's not that much primary material at Cactus East, but at Park Salyer there is some primary material that is not currently in the PFS plan that will come out in the first quarter of next year. But I would suspect that the Nuton integrated PFS, as I said earlier, will primarily target the open pit. But if there's primary material at Park Salyer and we're mining right there, I believe it would be considered as part of an underground plan as well.
Okay. Discount rate on the deal, NPV and NAV per share, for example. How does this affect it?
Well, obviously the assumptions that go into our own standalone PFS, we need to use the same assumptions within the integrated Nuton PFS. That way, obviously, we're then comparing apples with apples. Our current PFS that we're running is using an 8% discount factor. And we're also at the moment running a flat $3.85 copper price throughout the entire model. That could change in the next month as we continue to, look to optimize the model. But and as I said earlier, if there's an updated PFS that comes out with Mainspring in the third quarter of next year, whatever assumptions go into that model, that's what we would then compare ourselves against with the integrated Nuton PFS.
Okay, and what sort of relationship do you have with Mr. Friedland, your neighbor, since Nuton's involvement? Do you see any synergy with them?
Well, obviously, everybody knows Robert Friedland. He's had quite a remarkable career, many successes. So we've got a lot of admiration for, what he's did over the decades, in generating world-class projects. We have no direct communication with Robert Friedland per se, but at the project level, ourselves and the Ivanhoe Electric project teams are in discussion and communication with one another. And in the last month, myself and Taylor Melvin actually have met for the first time and provided an update to one another on our respective projects. So I think given that we're neighbors, it's very important that we try and work together. Obviously we want to maintain our strong social license, so we therefore need to know what each other is doing. Mm-hmm. I do believe over time there will be potential synergies between the projects, but obviously at the moment, we're only valued at 160 million Canadian dollars, 140 million US dollars, and we have a project 2 kilometers across the road that's trading at over $1 billion US dollars. And I certainly feel that the value gap is way too large, and that we need to see our share valuation, the company valuation, come up significantly, before we move forward.
Understood. We're getting down to our final questions. Does Nuton run independently of the main mine, and what controls do you have?
Does Nuton run independently of the main mine? If that's referring to the management, no, there'll be there's a committee, that steering committee that's been formed that has 2 members from Nuton and 2 members from ASCU, and those are working together, as I said, in moving the scope of work and the Nuton activities forward, and they'll be managing the integrated Nuton PFS. As part of this deal as well, they maintain their observer rights. They do, up till now, they have attended all of our technical committee meetings, but there will be a representative formally coming on to our technical committee, but no specific, no board seat, which I think is important.
Okay, final question. We're at the top of the hour, and then we will end our town hall before turning it over back to you, George, for a few minutes. But the final question today is, what is Nuton's track record with similar ore?
Well, it's obviously still very early days. The other projects that they're involved with are, at a very early stage. I think the column tests I just sort of started up there and are really at the very early stages. As I referenced earlier, I think we're probably the most well advanced as far as the column tests, and certainly now with the announcement of this option to JV agreement, I think it, obviously solidifies, our relationship with Nuton. So I think we're the forerunners here, and we're very happy to be working with Rio Tinto Nuton on this venture, and certainly believe that it can be successful and it would be a real win-win for both respective companies and obviously our shareholders.
That's great, George, and it's wonderful to hear that you're at the forefront of this technology. I'm very excited for you, and I'm sure your shareholders feel the same. So as I mentioned, we're now at the top of the hour, so we're going to end our informational town hall forum today. But before we leave, George, would you like to say a few words to your shareholders and audience members who have joined us here this morning bright and early? And there's quite a few of them, as you know.
Oh, that's great. No, thank you, Joanna. I'd just like to say a big thank you to the Arizona Sonora shareholders. I mean, obviously, these have been extremely tough markets as, economies around the world have really struggled. I think in the copper space, obviously, the juniors have seen their value eroded. And I know it's been very tough for the Arizona Sonora shareholders out there as we've seen the share price just steadily, move lower and lower. Not on anything that the company has done, in my opinion, but just on the general markets. I can tell you myself and my management team are working extremely hard in the background to ensure that we create significant value for our shareholders. Remember, I've got significant monies of my own invested, a weighted average price of $2.48, and I'm very confident that I'm going to realize a significant return on that investment within my own portfolio. So I just want to thank you all for being patient and supporting the management team. And for those new shareholders who've been buying shares at historic lows at $1.40, $1.45, I think you're going to do extremely well here in the next 2 to 3 years. So stay with us. There's lots of exciting news coming out in the first quarter. I truly believe that 2024 is going to be a transformational year for Arizona Sonoran. So thank you and happy holidays, everyone, and stay safe.
Thank you, George. And thank you so much for joining us today, everyone. Just a quick reminder to please fill out the questionnaire before logging off. It's literally 4 questions. This helps us and the company to communicate more effectively with you. And should you have any further questions for the company, you can email them directly to Allison at adwaskin@arizonasonoran.com. Thanks to everyone who joined us today. Happy holidays, everyone, and we look forward to seeing you at the next Town Hall Forum. Goodbye.